This morning, we want to look at some more of the practical issues you may come across on a day-to-day basis. I know Gary mentioned a couple of them here that we'll go through. He also mentioned the VAT on property developers and the 1/20th clawback, which I think we covered on Friday. So I'm not intending to cover that again today, unless somebody particularly has an issue with it, and we can deal with that in the Q&A if that's okay. So we're going to the schedule there. What we intend to cover is it following on from Gary's RCT, the reverse charge for subcontractors, quick look at emergency accommodation, transfer business relief, which is a big one, some of the stuff that is some of the activities that constitute development of immovable goods or services connected to immovable goods, and the place and supply rules pertaining to that. Liquidators and receivers, again, mortgages and possession, again, I think Gary touched on it, I'll be touching on it as well. The right thing to do, whether the joint option to tax is the right thing for you or not. The waiver of exemption, timing when you should do it, and we'll finish off then with the VAT clauses and the pre-contract VAT inquiries, which are where I know people find them to be a pain in the rear end. The reverse charge for subcontractors, which this is tied in with the RCT that Gary touched on a couple of moments ago. RCT, relevant contracts tax. It's a tax that is basically the revenue got basically blue in the face trying to decide whether people were employees or not employees, and they sort of gave up on it, and they use RCT as the way of administering to make sure the tax is paid correctly. RCT, for years it was a paper transaction, and the actual RCT search became a tradable commodity on the black market at one stage, but now it's all online, and Gary explained how you do it in your payment notifications, your contract notifications, site numbers, all of that. But on the VAT side of where something is subject to RCT, it is the principal contractor who is the accountable person in respect of the transaction. So if a principal contractor engages a subby, they have to apply RCT to the payments they make to that subcontractor. But in addition, the principal contractor must also account for the VAT arising on the transaction under a reverse charge mechanism. So again, if you have VAT deductibility and you don't include it, is it the end of the world? Probably not. But the right thing to do is to make sure that when you make a payment to a subcontractor, that you include the VAT in your sales and the simultaneous VAT in your purchases, subject to the normal rules in relation to deductibility generally. The only thing I thought, I'm not sure, I thought it was on the slide, I don't see it there. In an RCT situation, the 2/3 rule isn't applied. So if you had a supply that didn't subject to RCT, and the supplier, the cost of the supplier of the goods that they supply as part of the service exceeds 2/3 of what they're charging their customer, that can become a supply liable at 23% or standard rate as a supply of goods. We'll see with fixtures and fittings and stuff later on, but technically it could come within the 2/3 rule, where in a reverse charge under the RCT rules, the 2/3 rule is disregarded entirely. So it's always liable. If you're paying a subcontractor, the principal is liable to VAT at the 13.5%.